Thank you all for joining. Yes, I am Kris Martinick, Chief Executive Officer of Botala Energy. I'm here to provide a brief update, provide some more understanding around what we have announced recently over this quarter. It's been quite a big quarter for us, and I hope it provides some clarity. So please do ask some questions, and we'll attempt to answer them as best we can. So we see ourselves at Botala Energy as a diversified energy company. Particular focus, main undertaking is coal bed methane, which we strongly see a transitional phase happening for us from exploration appraisal and into production and revenue generation. So we're at that transition point, and I'll walk you through some of those steps. Huge. Okay, so disclaimer, you can read this, it's on the web. Just a short background on who we are and where we're at. So we have 420,000 hectares of acreage in Botswana. As you can see in the yellow on the map on the left, that's our acreage. We have split our business into our primary undertaking, which is gas, and we have some solar projects, which we are no longer require any funding from us at this stage. So we've set those projects up. On the gas side, our primary focus now is moving from the flow rates of 3.1 into the flow rates of multiple wells that we have drilled, which is Pitsy pilot project. And then we transition that from a pilot project to a commercial phase to then scale commercial production. So we have a clear plan of how we would like to take the field and develop it and commercialize it. Gas was discovered here many, many years ago in the early 2000s. It has flowed several times between several different companies. We have flowed it, we have burnt it. So we know that we can produce. The timing is just right, as it would seem here. Back when gas was discovered, it was also competing with the fields in Queensland. And at the time, it was very much a development profile of sending this to the likes of sending the gas in liquefied form to Osaka, to Korea, to China. They were big on-coast plants at exporting LNG. We transfer ourselves 20 years forward, and we get to this gas cliff where Sasol has publicly announced it will turn the taps off to the gas market in mid-2027 as the Mozambican fields, Pandey and Tamani, come offline. Now, our big focus is to plug some of the gap there. The market there is huge. We're not going to fill it all, but we can fill some of it, and that's what we are moving strategically towards in parallel work streams. So we are, and I'll dive into that in a bit more detail. So what we have announced recently is that we are attempting to establish ourselves, or we hope to establish ourselves as a first mover in the coal bed methane industry to get the gas into the Johannesburg market. There are other players, and there are some competitors in the region. And in fact, the market is so big that we welcome those competitors, because all of us, we will not even fill the gas market at this stage. So we are moving from an exploration asset. We have drilled 11 wells to date. We have a certified resource, and we have met some significant milestones at this stage. So we have, last year, we had an increase in our certified reserve resource from up by 42%. So we also just were awarded our mining license. We have very much progressed our commercial and development side of things with our bankable feasibility study, which has been initiated for the project. And that is looking at a 200 tonne per day LNG plant to deliver gas into South Africa. And I'll talk more about that in another slide. We see that there are some similarities here in that 20 years ago, the market wasn't ready for this gas in Botswana. We now transfer ourselves 20 years ahead, and we start to see the market dynamics shifting such that there is an energy-hungry market. We have a gas field. We're now trying to line up and ensure that we can deliver or attempt to deliver as best we can in the shortest time frame to make sure that we're meeting this demand and supply gap. We have signed an agreement with Score. Score are a major steel mill in South Africa. We have the reason why it is a letter of intent agreement rather than because it encompasses many sub-agreements. So it is an agreement that covers off the intent to work together in a bankable feasibility study. It also covers a binding agreement on the sale of the first tranche of gas and also the potential to expand. So we see that it's set at 3.5 petajoules for the first project and 4.7 for an additional, so that's an additional 1.2 petajoules for an expansion case. So the letter of intent actually covers many multiple agreements. So we see this as as a very transformational strategic partnership that we have. It is absolutely fantastic that we get to bring in our initial offtaker who are taking all of our gas for phase one, and allows us to completely optimize our solution. So from the LNG plant down to the end point, we now can control the entire scope, which allows us to optimize trucking, storage, and the regasification facility. We have not yet decided who will own and operate the regasification plant. That sits within Score's scope of work at the moment. And later stages, I assume, as we move into this project, more of the details will come out. But at this stage, we have an all-encompassing bankable feasibility study, which is fantastic, taking us from the wellhead, from the subsurface, all the way to the burner tip within Score's facilities. That allows us a complete optimization, which allows us to drive the costs down and improve the efficiencies of the entire project. As a part of that as well, there is a commitment, a firm binding commitment that they will take all of that gas. And so we see this as a major strategic directional change for us. It allows us to really focus our future plans on developing and getting this gas into production. Hence why we are doing everything in parallel. Most projects will probably do these in series, continue more with the flow rates, then decide to go to the mining license, offtake partnerships, etc. We've squeezed all of that up into parallel. We have done flow rates. We are continuing to do flow rates, and I'll build on that in the next slide. We are now moving into the bankable feasibility study, but we have ticked off 2 of the major 4 hurdles that get us into execution and production phases. That is the mining license and an offtake partnership. We now have a clear strategic partner who is going to help guide us with our bankable feasibility study. They're going to help, and part of that very much helps us with the financing of the project, because remember, at the end of the bankable feasibility study, we will need debt providers to provide us with funds to go into production. We are continuing with the PTE flow rates. So as I elaborated just before, this is Project PTE. This is an aerial photo. Sarawi 3, so the north arrow is missing on this. I apologize. North is effectively Sarawi 3 towards the camp, that direction. So to the right of the page is north. Sarawi 3-1 was our first well drilled in this area. We have produced 42,000 standard cubic feet from that. It is an open hole. Sarawi 3-4, and it was the hole that we have cores taken from, and we've done the desorption testing, which was fantastic for us. They are spaced at around about 450 meters on average between each other, except for some of the internal distances between 3.5 and 3.1. So what are we doing in detail? Right, so we're optimizing the well field at this stage. We know that the gas flows, we know it burns, we have done compositional analysis, we know we have isobutane, we have an exceptionally low CO2 content. We have had that we have had that gas composition done completely independently of each other. We have it tested by CSIR in South Africa and BTE in Botswana, and they were done on 2 different wells, so 3-4 and 3-1, and we had the same compositional analysis. So we're fairly firm on that, taking that into the BFS. Right now, we are determining what is the optimal drilling and completion method. Sarawi 3-1 and 3-4 are open hole. Open hole, just very simply, basically means we have cased all the way to the top of the coals, and we have 3 coal seams. So the big difference that we have in our region, we have 3 coal seams, and we are targeting the primary coal seam is actually the top, which you can see on the right here. This is our contour map for the Sarawi thickness map for the Sarawi coal. That is our primary coal seam. We also drill down into what we call the upper Murrapuli and the lower Murrapuli. The lower Murrapuli is thicker in the southern region. We find that the Sarawi seam tends to be non-existent in the southern region towards the southwest there. So we very much have a higher. It is 100 meters higher, and we're finding that it is a bright coal and a vitrinite coal, which has the parameters that we are looking for. The open hole is very cheap, and we know we can flow gas. What we are testing is, what does a fully cased and stimulated well look like? So that we're going to put in acids into these wells. So we're putting in citric acid at the moment, so lemon juice effectively, to see how much we can improve the stimulation, and at what cost increment do you gain X amount of cubic meters flow rate, and is that worth it? Because on the low end, at $220,000 a well, we can produce this gas at very, very cheaply. So I need to understand what is the cost metric version of a more expensive well, and is it worthwhile? That is what we're playing around with right now. We have 4 wells that we are mixing and matching a variety of different techniques, and we're working out what is the optimal recipe for that area. So the path forward, we will continue with our drilling. We have 3 exploration wells that we would like to drill as well in the area. One of those is a commitment well. We are continuing with Project Pitsy, so we anticipate getting our final flow rates out by mid this year. We are expanding our offtake. So our offtake agreements, we broke into 3 tranches. Tranche 1 is now fully subscribed. We have enough interest to start to work on our second tranche, which is another 5 petajoules worth of gas per annum. So that would be the expansion case. And then we have a future case, which we'll work on later on. We've got more than enough to keep us very, very busy at this stage. We are continuing to work with farming partners, and we'll continue to work down that line around people coming, or corporations coming in, who can not only provide funding at the asset level, but they are also going to provide us with good technical capabilities and execution capabilities. So they're a good partner and a good fit. So we see ourselves as a unique investment opportunity. We have significantly de-risked this project from where we started at IPO. And I must admit, we're a quarter of the price from the IPO, and we've done a hell of a lot of work. So I see us as a very cheap opportunity to get into a project that is on the cusp of transferring from exploration and appraisal to ideally having a revenue stream in the near term. So thank you for your time. I'll let you read your disclaimers at your leisure, but Kela bocha.
Great. Thank you, Kris, for that presentation. A very interesting project emerging there for the company, and a great opportunity too in Southern Africa. at the minute. So we will move on to the Q&A session now, just to end this investor webinar. Before we do start, a quick reminder, if you would like to ask a question directly of the company, please enter it into the Q&A panel within Zoom, and we'll get onto that for you. The first question which we did receive is an operational question. Kris, are there any issues getting wells in Botswana to work sufficiently and consistently, as has been referenced elsewhere by other companies?
Yeah, we see very similar. We're getting very similar coals to the Walloon play, same vitrinite content, ash content. What you need to be careful of is the clay content that we've seen in between the coal seams. That has caused some issues, but that really we're just tinkering with the acid concentrations there. So right now in the laboratory here in Perth, we are running mock simulations on cores and different dilutions of acids also on the clay content. So we don't see that as an issue. Clay can potentially be dissolved and then it effectively can block up some pores. So we're working on a mix there, but we've had consistent gas buildup in 3-1. We've not seen issues there. We do know anecdotally that some of the other plays, some of the lower seams, particularly the lower Murrapuli, we're not entirely sure of the amount of gas versus water that you actually get from that. So is that one entirely worthwhile? We're still measuring that at this stage. So for example, 3-1 is open hole to all three, whereas Sarawi 3-4, we are only testing the Sarawi seam right now. So we've got production data for 12 months, more than 12 months now from Sarawi 3-1. We'll be able to measure that against 3-4. So we're working on that, but we haven't seen any issues so far on a very cheap well.
Sure, thank you. So the next question off the back of the first, how many wells has Botala drilled itself to obtain relevant gas flow composition data, or is the company relying on data from previous operators of their current leases?
So we have 11 wells that we have drilled. There are some government wells as well that we have, and then we are talking with Kalahari Energy, for example, have the acreage to the north of us. We collaborate very closely with them. In fact, they've done our drilling, so we have a good partnership with them. But no, we are relying heavily on our data and our flow rate information. We've learned a lot, and we've actually been pioneering in the area a lot of the gravity work. So we use AMT and gravity survey work. And what we've found is the coal is everywhere, but we do have localized intrusive rocks. And we've actually just found that it's better off to work on where not to drill, because we find the coal everywhere. We find very good coals in our very good thicknesses. We just need to work out the slight tinker with making sure that we miss localized faults and dolerites.
Great, thank you. Next question, what do you see as the maximum daily rate potential for the field, and how big could the operation become?
How big? Look, depends on how much money and how big, and if the Botswana government or South African government really wanted to go hard on this, you could have a Queensland size. There's 7 TCF worth of gas in our field. Kalahari just to the north, if you combined us, there's something like 16 TCF just in our 2 fields. That's the Sarawi seam thickness. To the south, where we've got Talau, they've got the lower Murrapuli, and they have their reserves as well, but they're targeting a different seam to us. So if the industry really was to go gangbusters, we could see a repeat of a $7-8 billion project. But in reality, I think we're going to have a very nice learning to crawl, learning to walk, learning to run, then fly type analogy. So we're learning and going through that. 200 tons per day is on our pre-feasibility numbers, a circa $150 million project. That's big enough for us. And we can supply that comfortably on our certification for 20 years.
Great. Next question. Given the offtake agreement, do you have an idea of what revenue that will translate to over the next 6 years? I imagine that would be in production. Yep.
Yes, so I do. I cannot disclose the current price that we are negotiating with. That is very commercially sensitive to us and Score. The current price in South Africa, as per our announcement, I think it was $11 Aussie per gigajoule, somewhere around there. So when you work that out, it's roughly a rule of thumb, some rudimentary economics or calculations, sorry. You're looking at a petajoule per annum being about $10 million Aussie on the very conservative side. Yeah. So at what did we say, 3.5 petajoules, you're looking at $35+ million just in Aussie revenue. Now, as I said, that's on the conservative side. We know that the gas price is higher. We also know the gas price is going to move, as well as we're starting to see monthly fluctuations as well. So if you're an off-taker in South Africa and you haven't locked in a long-term agreement and you're buying month by month, those fluctuations are significant right now as they're starting to get into that tail end gas.
Great. The next question, it's around the Southern African gas market itself. Is there a problem dedicating gas to the South African market when there are unmet needs for gas and power in Botswana?
Well, twofold. So yes, there is a need for electrons in Botswana. So we're very much working with Botswana Power Corporation on that. Hence why we've got some solar projects as well. So we have done grid connection studies. Just to give a bit of flavour, we drilled 7 wells. We found gas, we flowed gas. We stopped for a while and we said, how are we going to monetize this and what are our commercial strategies? That's why we have 2 downstream locations called Sarawi and Leopani. We particularly stopped to make sure, why bother drilling if you can't commercialize the gas? We satisfied that. We did grid connection studies. We got environmental approvals, but we've gone back into drilling. We've gone back into the field. So we are satisfied that we can commercialize the gas. Yes, we can convert to an electron. Yes, we are talking to Botswana Power Corporation, BPC. I might say that's a bit easier. And BPC has an allotment there. They put out to tender some years ago 100 megawatts, which sits within their integrated resource plan. 100 megawatts of coal bed methane. They awarded 10 megawatts of that to Talau, and they've awarded 6 megawatts to Kalahari. That tender phase has shut. That actually shut before Botala was founded and started. And we are in negotiations with BPC about how to then bridge the gap between the 100 megawatt tender that was open and what they also need within the IRP. But we are hoping to provide electrons, at least in the meantime, within solar. There is also a desperate, but there is no gas consumer. There are no gas consumers in Botswana except for the Orapa power station, which is a 90 megawatt power station. It's 120 kilometers, sort of a dogleg north of, and that powers north of our field. That powers the Orapa diamond mine there. They do need gas, so yes, we are talking with the likes of BPC, but at the same time, we have a desperate market in South Africa that needs a gas molecule, which is more of an efficient way, is an efficient use of the gas for us.
That's good. That's a good answer. The next question, have you decided on equipment to dewater the wells?
Equipment to dewater the wells. Yes, we're using, we've got a variety of what we call ESIPs, so electrical submersible pumps. So that's effectively a cable with a a wire down to a pump, and then we are testing on these wells. The motor sitting at the top turns basically a rod that turns a pump down the bottom. Trialing both of those. We're going to an evaporation pond. We would love to use reverse osmosis, but we've got to get the capital in for that sort of arrangement. There's a great water source there that is untapped.
Okay, and next question, how many wells do you plan in the next 5 years?
Oh, I would love to say we should be getting after 150 odd wells, more than that. So if we're into full scale production and we're looking into an expansion case, we should be non-stop drilling, much like Queensland.
Sure. And how mature is your produced water handling strategy, and what issues does the present strategy for disposal and environmental compliance?
We don't have any compliance issues. So we meet our environmental permits. Right now, it's just we're evaporating from the saline water. Remembering that our field sits on top of two water aquifers. The top aquifer is the Intani, and we're in the middle of the Kalahari Desert. So there is a great water aquifer that we case off with 2 sets of casing, 2 sets of cement. We very much protect that, and then it's separated with an impermeable basalt layer that then goes into the further down water table, which is then brackish, which is that's well below 150 odd meters, so no farmer consumes that, and we're tapping into a water resource that is effectively unused in the area. So we would love to see that water, once we've cleaned it up, potentially used, but that comes at a cost. And right now we're focused on gas and making sure we dispose of the water appropriately. So that goes into evaporation ponds. Our biggest issue is actually the attraction of elephants. So not an issue I've had to face before.
Okay, thanks, Kris. The next question is just around your peers in Botswana. Are you aware of any other companies doing exploration in Botswana? And I guess in general, just around, you spoke about this supply gap. What are the other projects emerging or developments emerging that will help to fill this gap?
Yeah, so we have 3 players in the field that we're in. We have 2 of us that are targeting the upper seam, being the Sarawi, and then we have Talau, who are targeting the lower seam. Talau have a project that they're producing. They're bringing online for a power. I think it's gas to electricity, and also some solar stuff there. So we would love to see their success. Their success is our success. In South Africa, we have Kinetico and several others also looking at a kind of a hybrid between coal bed methane and a sandstone play. So yes, there are a number of us in the region. There is a well-known, I guess, gas resource across that entire area. But at 100 petajoules per annum sort of demand side, there's enough room for all of us, especially on a ramp up phase. So we do talk, we do collaborate. We probably also keep our commercial sensitivities, obviously, as well. But we have noticed that since there was an election in Botswana, that was the first change of government in many, many decades. There's been a reinvigoration of the government, and we're finding that what had probably got a little bit slow has now sped back up, and we have been very, very well engaged as an industry from the new government that has come in. So it's been a sort of a nice transition. It was very pleasant. There were no riots or anything like that. It was just very well accepted. It was a landslide, and we're now working very well with that government in the minor things like connection agreements, the agreement to wheel through their grids, which had sort of stalled over a while. Those negotiations have very much opened straight back up. So we're seeing just a lot of the inertia has gone from the system.
Sounds like positive steps in the right direction.
Yeah.
We have time for one more question. You've mentioned the Queensland industry 15 years ago and the similarities there with where you are in Southern Africa. Just to build some perspective on that for our listeners, what would be the similarities just in terms of the resources and the scale and the potential there, and what might be some of the differences between the two as well?
Sure. The fundamental similarity, back when the coals were laid down, the Triassic period in Gondwanaland, the southern tip of Africa and the east coast of Australia were actually combined, along with India slotting in the middle. So when the coals were laid down, they were laid down across southern Africa, southern India, and into east coast Queensland. Queensland has then split off and twisted. Africa has straightened and India has moved up. Hence why when the coal bed methane was being explored for in Queensland, it was also being explored for in Southern Africa, Zimbabwe, South Africa, and Botswana. The regulatory system wasn't in place. You look at what we've got in Queensland. Queensland has the same coals, very good Bowen coals, but in particular what we see is that the Queensland government very much got behind the industry as well and set up a really strong regulatory platform. They were very pro development. They also established independent bodies to assess all of the work between the environmental impacts and, say, fracking, for example. And so they had a whole bunch of environmental independent bodies, CSIRO as well in there, who helped formulate the correct opinions based on actual data. So that helped inform their policy. And then we also see the transitional phase where the demand profile was shifting such that they desperately needed gas coming on in Queensland, but also that Osaka, the Koreans were starting to need that gas supply. The difference between now and then as well, no one does, well, very few people do 20-year LNG offtakes, very much like we were doing back in those days. Now it's short-term LNG contracts, short-term gas contracts. So I see a transitional phase where there's a demand on the doorstep. The regulatory system is now in place, and it's also somewhat in its infancy for gas, because this will be the first production facility. So we are able to transition that. We're able to not manipulate, work with it, and also they're engaging with Queensland as well to make sure that there are some key lessons learned. The beauty that we're 20 years on, we've got the lessons learned and we're applying those.
Yeah, it will certainly help to follow in their footsteps. Okay, thanks, Kris. That was the final question. As there are no further questions at this time, I'll now hand it back to you for any closing remarks. Do you have any closing remarks you might have?
Look, as I've said, we've significantly de-risked this project. We know our limitations, but we've got a very, very strategic plan that we're working on. And we have a clear focus on how to develop this gas field. And we have always started with an end goal in mind. And we see that now as very exciting, potentially very lucrative, but also very transformational for that entire area where we can create jobs, improve the stability of electricity and energy in the area. Which I think is the fundamental key point there, because a strong backbone of energy production in that area really underpins industry, etc. So we see ourselves playing some role within that.
Great. Thank you, Kris. Thanks for that great presentation. And thank you, everybody, for joining us today. There will be a recording of this webinar, which we will circulate once it's ready to go. So everyone, have a great day.
Thank you.
Thank you.